So in this episode of the Ultimate Trader Workshop, we're going to be taking a look at an A to B is equal to CD pattern, but on a macro, on a monthly time frame that is filled. Of course, we're going to be using the 3-bar reversal for confirmation to even consider if this is a trade that we could take. Now, if we can do this, it's going to be a very, very long-term trade. I'm talking months, maybe even years, because it took so long to develop and complete, and it's going to take a whole lot of time for it to reverse, correct, and start a new trend in the opposite direction. In this case, bearish. So let's jump right into it. And if you need a refresher on the A to B is equal to CD pattern harmonic move, we do have that in Harmonic Trading Academy playlist. Just go down there and search for the A to B is equal to CD pattern. There might be a couple of them. But so looking at this impulse here, that's our A to B leg, okay? And we're talking about A to B being equal to C and D. So we're talking about an equal measured move. So all I would do is go ahead and clone that, right? Go ahead and clone that A to B leg. And I'd put it right here on this swing, okay? And this is going to be C. That's going to be C and D. So as you can see, the pattern has completed at D, okay? Meaning it's filled. But that doesn't mean that it's time to go or time to trade it yet. I mean, a trader that would have entered at D up here, yes, he would have been in profit, but then he would have spent 22 weeks. We're on the monthly chart. And if I go down to the weekly chart, it's actually 22 bars, weekly candles. He would spend 22 weeks just going up and down, up and down. I'm pretty sure there's better things he could have did with his capital instead of just tied it up right there. So let's talk about the better way to approach it, which would have been to wait for confirmation. When you're looking at this right here, there's no confirmation. There's nothing telling you that it would have been okay to enter, at least on the monthly chart. But if we come back to the weekly chart, it's a different story. Okay, so let's talk about it. Okay, exactly what we need to see. Okay, the big, beautiful trade 3BR. Okay, so let's break that down and then we'll talk about what's to come next. What can we expect next if this were something that we were going to take a shot at? A long-term investment. I shouldn't call it a shot. This is not something you play with. So on the weekly chart, bullish engulfing candle, followed by doji. It's not the best, but it's okay. Followed by our trigger bar and entry, our confirmation candle, because it closed beyond our doji, as the rules stipulate for the trade 3BR. Okay, so you got that. And here's your confirmation. It closed. This close here was actually last Friday. This was closing out, basically closing out August. So you see August close out bearish. So you get a bearish close for the month and you completed you got confirmation on the 3-bar reversal. And of course, here's our current week that started. Okay, now the other tricky part about this is, like I said, that was Friday. And then a trader could have said, okay, I got my confirmation. I'm entering on Sunday when the market reopened. Probably not the smartest thing to do, because you would have had no movement yesterday, Monday, Labor Day. And then today, Tuesday and Wednesday, back-to-back days at 6 p.m., as I'm showing here on the chart, the second and the third, you're going to have some pretty powerful news. So the market's probably going to try to shake a few traders loose. Of course, your trade psychology is going to have to be pretty strong to endure that. But here's where it gets special. Who's to say you would, even though you're confirmed here, that you would even have to place your whole entire position size? That whole entire premise has been wrong. It was taught to me wrong, and unfortunately, I've taught it to you wrong. So I'm going to take this opportunity to correct that and talk about how you would deal with something like this, especially with news events coming up. Okay, you would use something called a probe position. Okay, that's a fractional, a very small. You wouldn't come here. Let's say you're a trader and you got the type of capital and you can trade standard lots. You wouldn't even put a standard lot here. You would open this up with a micro, and you would wait to see if your micro wins. Maybe you come off the week. Maybe you come down to the 1 hour or the 4 hour or something like that to see if you can even win a trade in that time frame. And if that's confirmed, that's your next level of confirmation. So you have your 3-bar reversal confirmation. Then you want to test the wire. You want to test the fire. See if this is real, right? You want to see if this is really going to continue this trend for us. So you win the micro trade. And then let's jump back and let's talk about targets, because that's where the party starts at. So I came back to the monthly, and let's look at our C to D leg, which is where we would draw our targets off of using the Fibonacci retracement tool. And we would set this up like this, okay? We would say, there's already one here. The 382 is TP1. The 618 is TP2. And the 786 is TP3. But we'd be doing something different this time. Like I said, a lot of our mentors and gurus have led us wrong. The rich, powerful, successful, real Market Street, they don't do what we were taught to do, which is to cut your position in half at the 382 and then cut it again at the 618. No, it's the opposite. You started out by using your probe, your fractional, okay? If you trade standards, that would have been a micro. You would have came in with the rest of what's missing, which is 90,000 units, to make your position a full standard lot. When you get to the 382, you wouldn't cut that in half and go scary and pocket half of it. The trend would have been confirmed. Strength in the trend would be confirmed to you, given to you on a golden platter. So you do the opposite. That's where you would add another standard lot. This is called pyramiding. You add to your position sizes when the trend is strong. Unfortunately, no one told us this. Once you finally get down to the 618, you would come in with another standard lot. Now that part would be tricky because you can expect some resistance. Well, support, you expect support to be there, but resistance against the trend to keep going at the 618. Maybe a slight recovery, a pushback. And your psychology would have to be intact, and you'd have to be managing your stops along the way. Okay? Price action continues to move. Once it closes beyond the 618, you would add another standard lot. So at this point, you're riding 4 standard lots down to the 786 to your final target. Where at that point, we could suggest this whole thing would be over. It'd be time to get out. It'd be time to bail and get out the way. But at that point, you've already robbed the bank. It's just unfortunately, it's not going to be like the gurus tell you we can rob the bank every morning. In this case, you look up maybe about a year, year and a half, maybe even 2 years. And there's nothing that's ever going to touch you after that. I can promise you that. Let's take a look at what the risk versus reward profile would have looked like. So let me just grab the long short tool. And let's say, again, entering at our 3-bar reversal. Let me come in a little bit closer back to the weekly where our 3-bar reversal is. And our stops would not be up here for the A to B is equal to CD pattern. We're not trading the A to B is equal to CD pattern. We're trading the 3-bar reversal. So we'll use that structure, this structure right here. We're going to use that structure up there for our stops. To say if you come violate and take our 3-bar reversal out, okay, that's fair game. Okay, but remember, that only would have had your micro, your fractional, your probe position in it. Okay, and then remember the 382 is target 1. I'm sorry, 382 is way up there. Our 786 is down here. So let's see what the actual risk versus reward looks like. Let's just come back to the 1 month. And our total risk versus reward on here looks like 5.68, so almost 5.7. So you're pushing a 6-to-1 risk versus reward on this opportunity. Now, granted, this seems like a dream trade, a dream opportunity. Can't be real. The market moves harmonically, whether you like it, hate it, understand it or not. And you can see where things stopped, fizzled out when we got to D. And going back to where it started at, you see the bearish divergence. So instead of what you think is strength, market's telling you that this point here at that D where things started, all of a sudden, look, you got movement all the way, movement all the way. But all of a sudden, you should ask yourself this question, why is it then that when we get up here, this thing stops? and some decisions need to be made. So a lot of stuff is in front of you, but this makes for a wonderful, exciting opportunity. It's something that I'm definitely going to be taking a look at after today's news in, it looks like about 2 hours, and then we'll see what happens. But if it works out in our favor, this is a monster and a killer. So got a quick A to B is equal to CD pattern training. Got some more 3-bar reversal. We talked about a different way using the probe to just measure and just test the grease and see how hot it is before we put our entire load on. Then once that's confirmed, we need to see a win there. Then we come with the rest, and instead of subtracting at the 382, cutting our position in half, we're adding another full position. And we're going to write that down, managing our stops. And when we get to the 618, if we get confirmation that this thing ain't done yet, we're going to come over the top again with another standard lot or whatever your position size is. So we got to talk about fractional and probe entry, and then stacking and pyramiding. Okay, so we got a lot going into this one. Wanted to keep it short and simple. Hopefully you found value in it. Hit the like button if you did. Share the video if you know someone that this could help. As always, head on over to the Harmonic Trading Academy playlist, where we do teach the A to B is equal to CD pattern, as well as many other harmonic and advanced patterns, plus everything else that we can drop on the table as it pertains to structure analysis. That being said, you guys be good. Take care of yourself in the market, and I'll see you in the next video.